Well, the global sighs of relief following the announcement of Europe's bailout for Spanish banks have turned into a groan of despair. The positive market reaction to a possible €100 billion bailout has largely unwound as investors search for substance behind the announcement. Here's Philip Lasker.
A possible €100 billion line of credit for Spain's ailing banks bought about 24 hours of optimism.
This is intended to be a very clear signal that the euro area is willing and able to tackle the remaining challenges.
But the signal was anything but clear, and with a crucial Greek election this weekend, markets are unconvinced about Europe's willingness or ability to tackle the remaining challenges.
We don't know where the money's coming from. We don't know when it will actually be paid, whether it's before the Greek election or not. We don't know whether it will be enough. And we don't know what's really left for other countries.
Spain's government maintains the money's not a state bailout, which demands new austerity measures, but the EU says there will be strings attached. Investors are rapidly losing faith in Spain's ability to meet its commitments, and the government still has a €37 billion budget deficit to finance. The 10-year bond rate rose to an alarmingly high rate, approaching 6.5%.
The financing needs of the Spanish government have increased after this lending because no matter how we call it, at the end it means more of a deficit that will need to be refinanced.
And indeed, if we get into a situation where the potential losses from Spain are worse than initially estimated, we could have a complete rerun of the Irish mistake of 2010, where it ended up the government being more indebted and the financial stress not actually solved from the banking sector.
The National Australia Bank says it's all undermining confidence at home, despite lower interest rates.
People are scared. They're not going to go and gear up just because there's a 50 to 75 basis point cut. I think it's more to do with the fact that they're still uncertain about what's going to happen, and in that sort of circumstances it's going to take quite a while for monetary policy to have its impact.
In the meantime, NAB's survey showed business conditions slumped to a 3-year low last month amid a deterioration in confidence, and there's no sign that the European effect will disappear anytime soon.